Welcome to the Morgans Edward Street Wrap for the last week in January 2019. A lot going on globally this week, but in quick summary, the Dow saw its best monthly gain since October 2015 and the best January performance since 1989. For the month, the Dow was up 7.2%, and this was on the back of positive corporate earnings and the Federal Reserve deciding to leave interest rates unchanged as expected after lifting rates 4 times in 2018. The central bank emphasised that it will be patient as it determines what future adjustments to the target range for the federal funds may be appropriate to support these outcomes. The central bank also said it would adjust the rate of its balance sheet runoff and may even consider ending it. Another extremely busy period in US corporate earnings calendar. Just a few highlights. Boeing Co. Jumped 6.25% after reporting record cash for 2018, while cracking the $100 billion sales barrier for the first time in the company's 102-year history. Facebook Inc. also gained after the company recorded fourth quarter profit, which exceeded Wall Street expectations. Please note that the comments in this video are general in nature, and please speak to your Edward Street advisor if you wish to know if any of these stock recommendations suit your personal needs and objectives. With the domestic reporting season kicking off next week, I thought it would be a good time to invite our head equity strategist, Tom Sador, to discuss his thoughts on what to expect in coming weeks. Thanks for joining us today, Tom. Of note, obviously the Royal Commission is reporting today. They'll actually release it to the market at 4:10 Monday afternoon, so we won't get to action any of that till Tuesday morning. Timely, CBA is the first to kick off the bank's reporting on the 6th of February on Wednesday. How would you play that coming into the reporting season?
Yeah, g'day Brad, thanks for having me. Obviously it's a huge bellwether of a result for CBA. The Hayne report, I think, will overshadow what we actually think will be a robust result for the bank. So really the government's response into what actions are required to reform that business or to make adjustments to it will be key for investors. But at the same time, I think the market has actually priced a lot of that caution into the name. You see the banks trading on record free cash flow yields and dividend yields at the moment. So we're expecting a robust result from CBA, but I think once the recommendations are known, I think you'll see the market come back into the name once the certainty or the uncertainty is cleared. As you know, markets hate uncertainty. Once that clears, I think you can see that stock re-rate.
Nice. In terms of obviously sectors last year, which got knocked around a bit, obviously telcos, retail, those same sort of thematics are still with us. They haven't sort of gone anywhere. We've seen Telstra sort of re-rate over the last couple of days with the TPG news. Is there any sectors going into this reporting season that you can see are probably going to outperform?
We're putting together a piece on the hits and misses for reporting season coming up. And it's interesting, we've got some good ideas across the board. So you're right, the housing, building materials and retail sectors have been hardest hit in Australia late last year. The housing downturn is playing out through some of those housing focused names and also through the consumer in retail. But equally, we think some of those names are simply way oversold and can re-rate simply by delivering inline results. But talking about where we prefer to be exposed, it's in individual names really. So a lot of offshore earners, names like Treasury Wine Estates, which we've recently initiated coverage on. Stocks where we think surplus franking credits can be released by corporates ahead of potential changes this year. So Woolworths and Wesfarmers. Then select names like Emeco, ERM Power, Whitehaven Coal, where valuations aren't justifying the sheer earnings power of some of these businesses. And again, capital management potential, a name like ERM Power or even Whitehaven Coal, we see good upside risk on potential dividends stronger than the market's expecting.
Mm-hmm. And with, are there any sort of potential red flags out there that we should be aware of?
Yeah, we actually think, reporting season's a great time to avoid the disasters, because when a company's, the reality of sluggish earnings are revealed, the market is very, doesn't hold back during reporting season. So as always, we've got probably a dozen names that we think are going to report soft results. And in the mood the market's in, we think there's potential volatility coming in names like Pact Group, Invacare, Ansell, even Ramsay Healthcare. Some of the retailers like JB Hi-Fi, Automotive Holdings. We also nominate names that are simply too expensive. So some of those offshore earners that have run far too hard relative to fundamentals like Blackmores and Bellamy's, our analysts are flagging as outright sells and trying to shepherd those funds into names that we think will do relatively better.
Nice. This report is obviously being just published today. So look, if you want a copy of that, please let your Edward Street advisor know, and they can certainly help you out there. But look, Tom, thank you very much for joining us today.
Thanks, Brad.
So this is going to be very exciting next couple of weeks. Of note, next week, CBA, obviously, as we've just talked, will report on Wednesday. The Royal Commission comes out, as I said, again on Monday after market. So Tuesday is going to be a pretty busy day. AGL reports on Thursday. REA Group reports on Friday. So with all that, that's another wrap. Please feel free to share this video with your colleagues and friends, and make sure you like the Morgans Edward Street Stockbroking Facebook page, and also subscribe to our YouTube channel below. Have a great weekend.